Hi dear friends, today is Friday, August 22. Let's analyze the charts for the euro and the pound sterling and try to figure out their further dynamics. The single currency grew in the first half of the day thanks to strong performance in the EU manufacturing sector. The manufacturing PMI rose to 50.5 in August. The services PMI went a bit down, but remained above 50 points. The index slipped to 50.7. As a result, the composite PMI jumped to 51.1. This indicates robust activity in the EU economy. In turn, the euro asserted its strength. Similar economic data was released in the US with upbeat metrics. Initial unemployment claims counteracted last week. High manufacturing and services PMIs triggered sell-offs of risky assets and supported the US dollar. Apparently, markets are pricing in the fact that Fed Chair Jerome Powell will maintain the same principles of monetary policy at the annual symposium in Jackson Hole. The Fed is unlikely to cut interest rates in September because the fight against high inflation is not over yet. Interestingly, the lower-than-expected CPI last month was offset by a surge in producer prices. Recent minutes of Fed meetings and comments from policymakers reveal the most Fed officials advocate for keeping interest rates at current levels despite signals from the US labor market, in particular sluggish employment. Jerome Powell is widely expected to ignore some weakness in the labor market and focus on stubborn inflation, which prevents the Fed from further rate cuts. With this message, investors will plan long positions on the US dollar. On the other hand, the US stock market is set to fall. The Fed's rhetoric arouses discontent in the White House and with President Trump. Yesterday, he targeted Fed policymaker Lisa Cook, accusing her of mortgage fraud. Anyway, Jerome Powell is striving to find a balance, appointing appropriate colleagues to his team. He needs loyal voters on the rate-setting committee. As for the economic calendar, there is nothing special except the landmark testimony of Jerome Powell. Germany's revised GDP for the second quarter was downgraded. The economy shrank 0.3% versus the estimated minus 0.1%. It worsened the outlook for the Eurozone. Despite strong PMIs yesterday, other macroeconomic data should be better. No economic reports will be available in the US. So, the symposium is on investors' radars today. It is crucial because the Fed chairman declares the official rhetoric and clears up the agenda. A couple of years ago, Powell signaled a series of rate hikes at the symposium. Last year, before the Fed began cutting the funds rate, Powell made an announcement. Analysts and investors hope that he will confirm a shift to a softer monetary policy with a possible rate cut in September. The gauge of rate cut expectations was 90% in early August. Now expectations have lowered to 70%. Let's wait and see. Let's discuss the 1-hour chart for the euro-dollar pair. It is better to open long positions at 1.1567 after false breakout or at 1.1530 during a dip. Buyers will fight for 15.99. If it's broken and price settles higher, the door will be open to 16.26. But the fast soft stance could push the euro to 16.58 and even 16.90. I will plan short positions from these high levels, bearing in mind a drop of 25-30 points. I will plan sell positions at 1.1592, hoping for a downward correction or at 16.26 after false breakout. As for the pound-dollar pair, I will consider long positions at 1.3377 after a false breakout. Other entry points for long positions are 1.3346 or 33.15, bearing in mind bounce of 25-30 pips. I will plan short positions at 34.20. The economic calendar for the UK is also empty today. The bears will struggle for these levels today. We can also go short at 34.48 after a false breakout. Other entry points to sell the sterling are 35.06 and 35.27. I will sell, reckoning on a drop of 25-30 points. Good luck.